Today, we are diving deep into a massive, headline-driven rally that just sent the market soaring. They're calling it the Peace Premium, and wow, it absolutely lit a fire under AI stocks. Let's break down exactly what happened and, more importantly, why it happened.
So, here's the game plan. We'll kick things off with the big picture, that macro catalyst. Then we're going to zoom in on three of the day's biggest AI movers: ARM, Supermicro, and of course, AMD. And you'll want to stick around because we'll wrap it all up with your water cooler takeaway, giving you the exact talking points you need for tomorrow.
Okay, so what in the world just happened? The entire market rebound, it was all driven by reports of a potential de-escalation of conflict in the Middle East. This is what Wall Street calls a peace premium. You know, the idea that when the risk of war fades, investors immediately sell off safe assets like oil and just pour all that cash back into higher growth areas. This was the green light everyone was waiting for.
And you saw the reaction instantly. I mean, right across the board. The S&P 500 climbed over 0.5%.
The Dow Jones tacked on more than 300 points, which really underscored that broad sense of optimism.
But the real leader of the pack? No surprise, it was the tech-heavy Nasdaq, jumping almost 0.75%. And that tells you everything you need to know about where the money was flowing today.
So here's the domino effect, right? You get this geopolitical optimism, that pushes oil prices down, and that gives Wall Street the all-clear signal to put risk back on the table. And they did it by aggressively rotating capital right back into the hottest growth sectors. We're talking AI and semiconductors. All right, let's get into our first stock, ARM Holdings. And this is a great place to start. Think of ARM's chip blueprints as the fundamental DNA inside pretty much every smartphone out there. And now, they're becoming the essential DNA for the AI data center. And would you just look at this move? ARM absolutely skyrocketed, up over 16%. That made it the undeniable standout performer of the entire session. A move this huge tells you something really significant is bubbling up under the surface.
So what was the driver? Well, as soon as this market-wide fear started to fade, the big money, and I'm talking about institutional capital, they didn't just test the waters. They came back in with a flood, pouring into what they see as the absolute bedrock, the foundational layers of the entire AI trade.
And this right here, this is the core realization that's taking hold on Wall Street. ARM is the key. You simply cannot build the next generation of powerful, but also energy-efficient AI data centers without their proprietary architecture. It's not a nice-to-have, they are a non-negotiable piece of the puzzle.
Next up, Supermicro, or SMCI. So if ARM is providing the blueprints for the AI revolution, think of SMCI as the one selling all the picks and shovels for the AI gold rush. We're talking the high-performance servers and cooling solutions.
And what a monster day for them, surging over 8%. Now, this wasn't just a good day for them. This move officially made Supermicro the #1 top percentage gainer in the entire S&P 500. Think about that.
So that peace premium we talked about, it was like a starting gun. It immediately triggered this wave of aggressive buying into all the AI infrastructure names. Investors are just piling into the companies that build the physical hardware, the servers, the cooling, that makes all this AI magic actually possible.
And this really gets to the core of the confidence behind this stock. The market has this incredibly strong belief that the billions, and I mean billions of dollars that big tech has pledged to spend on AI is going to flow directly into SMCI's pockets for their liquid cooling and server rack solutions.
And that brings us to our third big mover, AMD. Look, in the super high-stakes AI chip market, AMD is making a serious play to be that critical challenger, the company that stops this from being just a one-horse race.
AMD also caught a really powerful bid today, gaining over 7% and closing back above that key $220 level. And this wasn't just retail chatter. You could feel the heavy institutional accumulation behind this move, signaling some real conviction.
So what's the driver here? It's really about a practical need in the market. As every single major company expands their tech budgets for AI, they are desperately looking for viable alternatives to NVIDIA's super powerful, but often supply-constrained chips. Let's be honest, nobody wants to be totally dependent on a single supplier.
And this isn't just wishful thinking anymore. AMD's MI300 series of AI accelerators, they're gaining real, tangible traction out there. And that progress is exactly what's giving Wall Street the confidence to aggressively fund what they're now seeing as a true, viable competitor in this space.
Okay,
Let's pull all this together for you. This is the section designed to make you sound like the smartest person in the room tomorrow. Here is exactly what to say about today's wild market action.
So, when your colleague asks about ARM, here's your line. ARM jumping over 16% is a huge signal. The market is clearly waking up to the fact that you can't build next-generation, energy-efficient data centers without their architecture.
For Supermicro, try this one. Did you see Supermicro leading the entire S&P 500 today? The fact that these physical infrastructure providers are catching such massive bids proves the AI capital expenditure cycle is real and happening right now.
And finally on AMD, here's the takeaway. AMD breaking back above $220 really highlights the market's desire for a secondary AI hardware play. Institutions don't want to be entirely beholden to NVIDIA's supply chain.
You know, the market aggressively rotated back into tech the very second geopolitical tensions eased up. So the big question for all of us is this: are you fully trusting this relief rally and buying this dip, or are you maybe keeping your portfolio a little more defensive, just in case?
I really want to know what you think. Drop a comment below. And hey, don't forget to subscribe to Market Fluency for your daily edge.